Yes, it's not a bad showing for lunchtime on a Friday now, is it? So I'm quite happy about that. All right, so we're going to talk you through Atlantic Lithium. With me, I have Amanda Harsas, who's going to join and do some of the slides for me as well, so to get a little bit of a contrast. So Atlantic Lithium is listed on the ASX, and it's listed in London. It is an advanced stage project in that we completed DFS last year, expect to complete permitting this year, look for first production from module units the year following, so next year, and indeed full production to start and commence in 2026 from the plant. So what's nice about this project, and I know a lot of people are worried about the lithium space, and if you look at the last 10 years, I think someone sent me a chart the other day, lithium has in 3 years been the best performing mineral and also in 3 years the worst performing mineral. So the lesson to be learned from that is you want something that's a lower cost profile, and this project is certainly that. So we're looking at all-in sustaining costs of $675 and C1 cash costs of $371. We'll take you through these details as we go. We're also blessed in terms of the nature of the project, as it's actually a pretty low-cost capex as well. So we have $185 million currently in the DFS, which is pretty low for a project in our industry and very fast payback. So, okay, so I'll just flip on these slides. Does that work?
Is it not working?
Don't know. Oh, there you go. Thank you very much. Okay, so that's the very important cautionary statement you've all read. Thank you. So just talking about where we are with the project today. The history of the project is we identified it in around 2016. We started working on 2018. We have continually added to the resource. So we moved year before last from 20 million tons to up to 30 and then 35 million tons now, most of it in the reserve category. We can continue to grow that project, and one of the things we'll show you is the potential to keep growing the project more from that 35 million tons. We have a very large license area, and we've hardly picked at it so far. In fact, I think we're working no more than 5 kilometers from the original discovery to date so far. The excellent economics I alluded to. So we have an all DMS project, simple processing, very good infrastructure, and only 110 kilometers from the port facility that already exists and is there, which you can take advantage of. It's also located in Ghana, which is obviously a very well established mining jurisdiction, and one in which, again, you have a lot of highly qualified staff, which we're bringing into our team as we speak. We're overwhelmingly a Ghanaian staffed operation. In terms of the on track to deliver, as I said, we completed the mining lease at the end of October last year, which is a very important step for us. That goes to parliamentary ratification, which we expect to see very soon now to be completed by the government. And in parallel to that, we're doing all the remaining licensing and permitting steps with the objective of completing this in the third quarter of this year so that we can break ground before the end of the year. Also very important where we're located. So for those of you who know or don't know Ghana, obviously it's located on the west coast of Africa. Very well situated to actually feed any of the major markets. We have an existing agreement for offtake going to North America. We can also serve Europe and indeed Asia. We're actually running a offtake process at the moment, which my colleague Amanda will talk to later, and it's going very well. There's a lot of interest in the product. So regardless of what's happened in the lithium market, everybody's very focused on where they're going to get their supply from for 2026 and onwards. So we've had a very good response to that, and that process is ongoing as we stand today. It also has very good ESG credentials, the project, partly because of its simplicity, and we'll come back to that as we go. So as I said earlier, I think very critical to this project is where it sits on the cash curve. It's a low-cost operation with payback that's very fast. This slide speaks for itself. You don't want to be one of the higher-cost operations, and in the last couple of years, a lot of projects were hurried to production with relatively high-cost scenarios, some of which have now had to shut down production or indeed cut back on what they're doing. So I think it's very important in terms of a project that will always survive. The bottom end of the cycle is really what you want to have. In terms of the current shareholder base, and I think there's a couple of things I'll draw out here. The first is that we have a very large shareholder, which has been with us from the very beginning. I've been involved with the company for the last 9 years, and that shareholder has been there all the time as a significant shareholder, and that's Assor International Holdings. So obviously that's a South African group which has substantial mining operations in Africa, so they know Africa, they know mining. They are huge fans of the project. They really like and enthuse what we're doing. They actually made 2 proposals to acquire the company last year at 33 pence per share. We currently trade around 20 pence pence per share. So that's a significant premium to where we are today. But we didn't feel it represented significant value for all our shareholders, so we rejected those bids at that time. But they remain a very significantly involved group and very supportive of what we're doing. Secondly, we have Piedmont Lithium, which we have a partnership project with, and we have an arrangement with them where they provide the bulk of the funding for the project to take it to production, and Amanda's going to talk about that later. And we have the Minerals Income and Investment Fund. So when we reached agreement with the government last year, obviously in Ghana, they have a free carry stake in the project of 10%, which we increased to 13%. But above and beyond that, the Sovereign Wealth Fund of Ghana, the government of Ghana, is investing on a commercial basis, both into Atlantic Lithium, which is shown here, but also into the project level. So we'll see that project level investment. They're coming at the project level for 6%, which we'll see completing in the second quarter of the year. In terms of board and management, I'd just like to add, and one of the things that people see is that all the directors or all the executive directors have been very active buying stock in the last year. I think I've spent well over $1 million Australian dollars in the last year buying stock myself, and indeed has my colleague Amanda, and indeed other directors. So we really believe in what we're doing, and we put our money where our mouth is. So just talking again about the mining lease, obviously this is a very significant step in terms of de-risking the project, and we're now going through the remaining permitting steps to complete, as I say, this year, so that we can actually break ground on the project. That agreement considered several elements which the government really wanted to see a participation, because we are a Ghana project, including a listing on the Ghana Stock Exchange, looking at other potential value add we could do with the project. We have a very important feldspar byproduct which can feed into the ceramics industry in country, and indeed itself, actually the government owning more. And giving the opportunity for other Ghanaians to invest on the exchange, on the Ghanaian Stock Exchange, is a very important step, and we look to complete that very shortly. I'm going to hand over to Amanda because she's going to talk about the numbers. There you go.
Thanks, Neil. What I'm going to do is really take you through the funding for the Ewoyaa project. As Neil's mentioned, it's really, one of the highlights of the last kind of 6 months in the lithium downturn in market sentiment and prices has been the focus on low-cost producers, and that's what we are. So it's important that we have the funding in place as well. So one of the first things I want to talk about is MIF, the Ghana Sovereign Wealth Fund. As Neil mentioned, they have come in at 3% of the Atlantic Lithium level, and that was completed in January. We're now finalising the strategic investment into the project, and that's for 6% for $28 million US, and that's contributing interest. So whilst the government has the 13% free carry, the 6% of MIF will be a carried interest, so they will contribute another $11 million to the project of the 185 in the DFS. What this also means is that we have one of the MIF representatives as a board member of Atlantic, which is important for our stakeholders. MIF are very happy with their investment. They're happy to come in at commercial terms, and they see us as a partnership both in Ghana and globally. So the next, the major funding is through Piedmont Lithium. So we entered into agreement in July 2021, and Piedmont is earning into our interest in the Ewoyaa project. So we will be, once the funding is complete, 50-50 joint venture partners through our intermediary subsidiary. What that means is that Piedmont need to sole fund $70 million and then contribute to 50% of the remaining costs. So there'll be in excess of $120 million provided by Piedmont. And once that is done, they'll have their full 50% economic interest in the project, and their offtake agreement that is part of the deal will be triggered as well. So until the funding's complete, then the offtake agreement doesn't kind of kick in. Sorry, importantly, Atlantic maintains control of the project as well. It's one of the criteria we went into the strategic investment with. So what this means is Atlantic itself needs to fund around $40 million US of the project, and we're going to be doing that by a offtake deal for prepayment funding. So we're currently running a process with Macquarie Bank. We're about halfway through. We've had non-binding indicative offers. We've chosen our stage 2 partners to go forward, and they're in the process of doing detailed due diligence, site visits, management presentations and all the questions around that. So it's going really well. What the deal is for 500,000 tonnes of spodumene over a 3 to 5 year period for 70 to 100 million US of prepayment. It will be effectively prepayment funding. We'll only draw down as we need that. And what that is, it has a pricing mechanism based on the chemical prices. And all of the parties so far have that are in this next stage have met our criteria, so to speak. So we're going into the kind of final stages of what that is. And we've probably got more parties in that process than we had originally envisaged. So that will be completed in around April this year. The other thing, I suppose, to mention there is sorry, I kind of lost my train of thought then. No, it's all good. So it's for 30% of the offtake. So one of the important things about this is finding customers as well. It's not just for the prepayment funding. Finding a customer and a contracted customer is really important given the current spot prices and the volatility in the market as well. Okay, so our pathway to production. So Neil mentioned this briefly. We've completed our DFS. We're currently in our kind of development phase where we're getting our contracts in order. We're completing our EPA permitting. The government's completing the parliamentary ratification of the mining lease. And once that's all done, which we're expecting in this half, we'll basically be able to get a mine operating permit and we'll be able to break ground in August and September this year. What that is we've got a modular unit coming in next year. So that's kind of it's basically a kind of, Meccano set type put together operation. It includes the same things as the main plant, but it actually delivers a small amount of production for us. We'll then complete the main plant in early 26 and kind of go into full ramp up through the 2026 period and into 2027 for 2.7 million tonnes. Okay, I'm going to pass it back to Neil for the final couple of slides.
Thank you, Amanda. Okay, so as I mentioned earlier, and I think it's very important to note, we have a very large license area. We have done nearly 30,000 meters of infill drilling. Some of that was obviously sterilization drilling, and some of you may have seen on our press releases as we've been trying to do the sterilization drilling, you actually encounter more pegmatite, and actually some of our best intersects ever. So it's good to make those discoveries. Resource continues to grow, and as I said at the beginning, we've only worked 5 kilometers from the original discovery. We have an awful lot of ground that we still have to work on and other pegmatites identified that we can work on going forward. So we think the longer term potential is much bigger than the 35 million tons we currently have. But for the moment, the main target here is to take the project to production on a good timeline. Just touching on the economics, which you see are very robust. These come from the DFS that we did last year. So 365,000 tons per annum steady state production. So that's a very good number. That puts us as certainly in the top dozen spodumene producers worldwide once that comes into place in 2026. A very strong NPV, a 12-year mine life, which we believe we can continue to expand. And a very strong IRR of 94%, which I think is a very good number indeed. Payback, very quick, and as I mentioned before, CapEx modest for a project, partly because we have such good infrastructure and the simplicity of the operation in terms of production. So just bringing it to conclusion now. In terms of the next steps on the permitting, so the EPA is a very important step, which we'll be completing, we hope, by the middle of this year, around the middle of this year, as part of our permitting process. As I mentioned earlier, expectation we get parliamentary ratification in the next couple of months, and indeed the remaining permits and licenses that we require actually to be able to take the project to production and break ground before the end of the year. DFS, I think it's one of the things I'd like to highlight. The DFS is actually pretty recent, so we did it last year. So these are relatively new numbers. I know a lot of DFSs out there have been mentioned that are rather old and maybe pre-COVID, and some of the numbers may not be very realistic. We feel this is based in a very firm base at this point in time. We're going through the operational readiness stage and award of key contracts, which is very important to us. And indeed, in terms of the project build, the long lead items and a transmission line, which runs over the property, we're moving over to one side. We continue to expand our license area. And I think one of the things that some of you may have noticed, we've recently got more license areas, which are very prospective. And again, have the potential to add to our resource. We're always looking at more opportunity and continuing to grow the project. And I think with that, I'm coming up to the question time, so I will turn it over to Q&A.